Understanding the overall market direction and also being able to differentiate it from the intraday structure can help every trader, whether you're an advanced trader or intermediate or beginner trader. This can help you know when to be a buyer in a bullish market, when you're able to counter trend, and when you're able to follow the trend. And in this case, I'm going to use the term as a point of reference to explain what I'm talking about. In this case, my overall market direction on Ethereum, I remain bullish any day, anytime. Wake me up from the sleep right now. I'm going to tell you I'm massively bullish on Ethereum. But on the intraday level, I'm bearish. Why? Now, let's start from the bigger time frame. The reason why I'm bullish on the bigger time frame, I've always talked about this. If you've watched any of my previous video on Ethereum, we're consistently creating higher highs and higher low and a higher high. Potential higher low, we're waiting to see price break above the overall previous high, creating a new all-time high. This will be a new higher low. So we're bullish. But on the intraday level, if we go to, let's say for example, we'll go to our 4-hour time frame, which is our intraday time frame, you can see how we've actually consistently been creating. From here we've been creating lower highs and lower low, lower highs and lower low. Came up, run liquidity from here. Then what do? We're still seeing lower high and lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then here took liquidity. Then what happened again? We failed to create a lower low, created a lower high, created a lower low. So right here, after creating that lower low, what do? What am I looking for? This right here is my point of interest, where I want to see the market gravitate to. Right here, you can see this was the last down close candle before this expansion that broke above this structure right here. And after a break of structure, I want to see a retest where this is my potential area I'm watching. 1, inefficiency. 2, last down close candle. And look what price did. Came very close, mitigated the wicks. I'm not satisfied with that. I want to see a mitigation of this inefficiency potentially, or a mitigation of this last down close candle. At least that would be most preferable. At least the wicks, this week here, I'll be much more satisfied with that. And if we look at the bodies of the candle, we're using the line charts to see the bodies of the candle. Right here, this would be my perfect zone. I want to see a mitigation of that key level. If we can get that, that would be awesome. That is the only area I'll be so satisfied to look for potential buys, for price to continue higher. Look what's there, the bodies of the candle. So if we go back to the 4-hour time frame, you can see price, we've been in a range, and this range right here, in my opinion, this is just price ranging, looking for potential resistance to now run sell side liquidity. Resting right here for all the traders who try to catch this buy, they're all in profit. So potentially I'm targeting these lows right here. That's my target, and that's the 1:12. Now I'll show you how I got into this entry, my thought process. First thing I did was I'm looking at this inefficiency here on the weekly, and price mitigating this inefficiency here. The moment we mitigated it, all I'm looking for right here is a 1-hour break of structure. Now we start scaling down from 4-hour. You can see even on the 4-hour, we have a low, we have a high break of structure right here. Broke structure on the 4-hour time frame. After that break of structure, look what we left right here. Low resistance liquidity. You can see the low resistance liquidity. After leaving the low resistance liquidity right here, what do we see here? Inefficiency. We'll go to 1-hour time frame, which is the time frame I wanted to see the overall break. And here we have low, the overall low, the overall high. Right here is the overall low, my overall high on the 1-hour time frame. And you can see how price broke structure. And what did we leave right here? We left low resistance liquidity. And after leaving this low resistance liquidity, what do we have right here? Inefficiency. And what did price do? Price came directly up to that key level, took the low resistance liquidity, mitigated that inefficiency. And after that, what am I looking for? I'm looking for a 5 minutes break of structure right here. So we'll go to the 5 minutes time frame. You can see even on the 15 minutes time frame, there was a low, a high, break of structure. This was the break. If we go to 5 minutes, a low, a high, break of structure right here. My entry, I'm using this low. I'm not trying to complicate things. Why? Last down close, that last up close candle before dropping to break structure. Stop loss 1 or 2 pips. 1 or 2 pips above this high is sufficient for me. See how price beautifully came up here. In the midnight, I was pretty much sleeping when price came in here. I just had the alerts and I set a sell limit here and just allow price to do its thing, and price just came, mitigated me, displaced. Now the moment we broke here, stop loss, break even. I don't care whatever the market wants to do. If it wants to keep going lower, awesome. I make 12% on one trade. If it wants to reverse on me, wipe me out, that's okay. I lose nothing. Risk off. There's no risk on this trade anymore. It's a risk-free trade. I'm just gonna allow it to do what it wants to do. I usually don't like taking trades like this, if I'm being honest with you. The reason is because this is a counter trend, because I'm trading against the overall market direction, and that is why I was very quick to trail stop loss to break even. If this was a buy, I wouldn't be so quick to trail stop loss to break even, because price can still decide to do something like this. Price can still decide to come back here and then still continue lower. That's 100%. I've seen that happen a lot of time. So that is why it's not really essential to be so quick to trail stop loss to break even. But this, because this is a counter trend, overall trend is bullish. So I'm counter trending the overall trend being bullish from the monthly. So that is why I'm so quick. The moment price broke through this low, I just trail stop loss to break even, because anything can actually happen and it can still drive price to continue up, to even run this high and then break structure and then continue selling. That can still happen. That is why I hate taking counter trends, because things like this can easily happen and wipe you out and still continue. So the moment I have an opportunity to trail stop loss to break even, I'm taking it. And the reason I took this was because of this break here. I'm taking that opportunity to break even, allow price to do its thing. If the trade works, perfect. If it doesn't work, it's risk-free. But already, first target is this key level at 2,511. After that, my second target is right here. You can see literally right here is my second target. Another low resistance liquidity resting right there. So you can see how I look for this low resistance liquidities. The reason why I'm always targeting the low resistance liquidity is because it's an area that price can easily run through. Price can easily run through a low resistance liquidity. That is why it's my target. And if I don't see any low resistance liquidity here, I wouldn't use that as a target. If I see a high resistance liquidity here, I'll target before the high resistance liquidity. Not because price cannot run the low resistance, the high resistance liquidity, but it's going to encounter more. It's going to need more effort to do that. And for low resistance liquidity, anything can happen and you can literally see something like this. Boom. Just smash it. Smash it, because there's not much resistance or support there that can hold price to drive it upwards. But for high resistance liquidities, let me give you an example of high resistance liquidity. This right here is a high resistance liquidity. Why is it a high resistance liquidity? Because we have a high, we have a low, and then price came up here, took liquidity from this previous high, and then broke structure. So price will find it difficult to rally above this high. That is the reason why I'm looking for entries right here. Price coming up here, I'm looking for a sell, because there's a high resistance liquidity here, and then I'm targeting the low resistance liquidity present right here. You can see how very simple this is. Understanding the high resistance liquidity and the low resistance liquidity can be a game changer for you in your trading, because it will make you realize areas you can use for a potential stop loss and areas you can use for potential take profit. Now, for a high resistance liquidity, I'm using that area as stop loss. If I can confidently put my stop loss here, I can confidently put my take profit here, because this is high resistance. Price will find it difficult to rally above it. This is low resistance. Price will find it very easy to rally below it. Does that make sense? Let me show you another example on a bigger time frame perspective. So let's look at what's happening right here. This right here, a high, we'll have this high, we'll have this low, we'll have this higher high. This is a high resistance liquidity. Now look at what's happening at that high resistance liquidity. Price came up the first time towards that high resistance liquidity. Look what happened. Slumped. Price came up again impulsively towards that high resistance liquidity to rally above it. Look what happened again. Slumped. Does that now make sense? To show you there's a lot of resistance here, pushing price to the downside. Each time we've come up, it's pushed us down. It doesn't mean that we will not eventually rally above it. That's not what it means. But it's just showing you the reason why we're seeing more resistance for Ethereum to create a new all-time high, because we have a major high resistance liquidity on the higher time frame that consistently keeps pushing price down, consistently keeps pushing us down. Yes, we will eventually rally above that high. I'm very confident about that. But we have already encountered a lot of resistance. The same thing goes with when if I eventually, let's say price eventually comes down here and I eventually catch a buy from here. My first target is going to be, if I catch a buy from here, my first target is going to be this. Why? Low resistance liquidity. That's why I'll be targeting this. Price can still come as low as even mitigating here. It can come as low as coming down here to scare everybody off. Everybody wants to buy it. That can happen. But in the meantime, on the intraday level, this is our trade risk off. And if you enjoyed this video today, if you've learned something from it, give it a thumbs up. You can repost, you can comment your questions or anything you have to say about the video. I appreciate you, and I'll talk to you in the next video.